I did a little bit of research on what does a soft landing mean and why is it happening. For one, it's that companies have slowed down in hiring. They're not really laying people off. They've slowed down in hiring. And what the Fed is after, based on the definitions that I've seen, what classifies as a soft landing is if they can get inflation down to 2%, unemployment to stabilize somewhere between 3 and 4%, and a 2% growth of GDP year over year is the definition of a soft landing that I have found, right? So they're trying to keep those numbers in line. What do you think of that to start with, GC?
Well, those numbers that you just threw out there is like the Fed hitting a grand slam. Like the Fed having 2% inflation, unemployment at 3 to 4%, and GDP growth 2% or higher quarter after quarter. That's like perfection for the Fed. And that's like perfection for the economy. And I haven't seen perfection by the Fed or the US economy very often. So what I would say is this term of a soft landing, you are definitely hearing more and more about this, but the idea that the Fed would hit these numbers and that would be the definition of a soft landing to me seems, I would think that the soft landing listen, we haven't talked about soft landings very much. It's not like in the vernacular. A lot of the terms economically that we speak of are different today than they were in the past, but this is one that we don't talk a lot about. So there's not really a definition of a soft landing in my experience. What I would say is that if the Fed can orchestrate this, if the economy complies and we get inflation closer to 2%, which is that consumer price index measurable, if that gets closer to 2% and we are not in a recession, that would be achieving a soft landing that I think the Fed would be really happy with. A recession generally is defined as 2 consecutive quarters of negative GDP growth. So I think that data is more of kind of like perfection. And I think that many people would call it a soft landing, even if you didn't get exactly there, if the target was a little bit wider.
That reminds me of why this even came up, right? It's because the Fed is not expecting a recession because there was GDP growth, right, in the last quarter. Therefore, we can't be expecting a recession because it won't be 2 consecutive quarters of GDP growth, right? To me, that's kind of how it all kind of like started bubble up. It's like, oh, wait a minute, we're not predicting next quarter a recession. Therefore, maybe we should be predicting a soft landing is kind of how I've interpreted the rhythm of all this.
It's just the timing. Like, how much time are you giving for these predictions, right? Are we talking about right now? Or are we in a soft landing? Nobody really knows. I think you need to look a little bit farther, even for short-term investments. I think you need to be looking a little bit farther out than right now. You need to be thinking about where are we going to be 1 to 2 quarters from now. And especially for our type of asset, which is a long-term asset that wins in the long term, we could be thinking about what's happening right now and how is that going to affect the decision for where I'm going to put my dollars so that it performs better over the next 10 years rather than the next 10 months.